You also see another or a new non-service type of cost that's related to planning and evaluation. This is not new to HRSA, but it's new to our form, new to our process, in that the intent is to help agencies relieve the pressure on administrative types of costs that hit that count against the admin cap. We also provide and will continue to provide agencies with additional rebate types of funding that don't hit against the cap. But for the sake of completeness, you're also allowed this thing called planning and evaluation types of costs, and I'll review those. So what planning and evaluation entails is that it includes activities related to planning for the use of Part B funds. And again, this is only Part B funds that we're talking about here. These are funds that are used to evaluate the effectiveness of those funds that you receive in delivering the needed services. So some of the specific activities that planning and evaluation funds may support for Part B include the following: costs related to capacity building aimed at increasing the availability of service, technical assistance that you provide to contractors, program evaluation type costs, assessment of service delivery patterns, assessment of need, obtaining community input, and drug utilization reviews. Now, these costs are normally at the MDHHS level, but to the extent that agencies may have costs related to the activities that I just described, you could capture those as planning and evaluation types of costs if you have them. So that bucket is available for use. So at this point, I will turn it over to, I think we're at the part of the agenda where Betsy Sabania is going to review the Ryan White reporting tool itself.
Great, thanks, Tom. I will follow suit and turn my camera on just for a second so people can put a face to my name. And now I'm going to turn it off. So let me share my screen. Can everybody see this okay?
Yes.
Okay, perfect. So
let's see if you can zoom in a little bit on it. That might be helpful for people.
Yep, thanks. Okay, so most of you on this call have been working with this reporting tool for, I don't know, the past 3 years now. So I'm not going to go super in depth. I know there are some people on the call who aren't as familiar with this. So if you need me to go in more depth on one of the tabs, just raise your hand and let me know, and I'll give some more detail. So this is what our 2021 reporting tool looks like. So I kind of just put in some random values in here so that you can kind of see what a budget would look like. So in this drop down, you're going to select your project just like before.
Can everyone please make sure that you're muted?
Thank you. Our salary cap has increased to $197,300 this year. So that's the biggest thing of note on this tab. And then if you go to your subcontractors tab, it looks the same as usual. You'll put in your vendor address, phone number, and then select if they're a vendor or a contractor or a subrecipient. And then in your personnel, again, this is the same as before, where you'll put, if they're going to start after the beginning of the fiscal year, you'll put a date in here. So say they're not, it's a TBD position, they're not starting until November 1st, you'll put in the expected start date here. It'll lower their FTE for that year. I'm going to undo that so that we have a balanced budget here. Moving on to salaries and wages. You'll want to select their name in this drop down. I only have one person in here, so there's only one name showing up, but then you'll select their position title and then the activity that they are associated with, and then the number of hours that they're expected to work on that activity for the project that you selected. If they're funded with one of these other sources, you will enter in their FTE worked on that. So for example, if they only worked 10 hours on administration, and then they have other funding sources of other, then you will enter their FTE in here to make sure this balances. If it doesn't equal 1, then it will highlight in red here. Moving on to fringes, these are all, this is the same setup as prior years. You'll put in your rate for each of these activities, select what type of benefits you have, and it will automatically calculate the cost over here for you. Travel, again, there's really no changes on this tab. So you'll select your activity here that the travel is associated with, and then put in the details, number of staff, units, there's all these choices, number of units, and then cost per unit. Supplies, very similar to the travel tab. The only thing to note on here is if you put any incentives or anything like that on the supplies tab, you'll just want to make sure you're tracking it. Kara Niameta, who is our newest grants and contracts analyst, is working on revamping our incentives toolkit so that we have, we don't have an ETA on that, but so that we can have that available for you guys to more easily be able to track incentives that you give out if you need a template. Moving on to contractual, you'll select one of the vendors that you put into your subcontractors tab, give a brief description of the work they'll be doing, and again, unit type, and compensation rate. Equipment, the only thing to note on here, most of you, if not all of you, already know this, but just to emphasize, you want to put any individual item that is $5,000 or more. So if this vehicle is $3,000, it's going to give you a red kind of conditional formatting here to tell you that it should be under supplies. And then anything that's over 5,000 or 5,000 or over will go in the equipment tab. Other expenses, again, the same that it's been in prior years. Indirect costs, you'll select if you have a indirect cost rate agreement or de minimis rate. You'll put your indirect cost rate in here, and then you'll select what it's based off of. And then it'll automatically calculate, excuse me, your indirect costs here. And
just a comment on the indirect tab.
Yeah.
The local health department's indirect tab will look a little bit different than what you're seeing, in that it will also allow cost allocation plan cost to also go in here, in addition to the regular indirect types of cost. So it'll look a little different. And also want to point out that the local health departments this year do have a dedicated template just for the local health departments, so that it's always in local health department mode, so to speak, versus non-health department, and vice versa. Last year we had a little bit of a thing where some of the agencies were getting the template types intermixed. So for this year, we just kept them separate. Thanks.
Yep, thanks, Tom. So once all of that is input, you'll go to your budget narrative tab and then click the link to update the pivot table data. Hopefully it doesn't take too long. Yep, okay, so then that will update and you'll have this information here. And what'll really be important to you guys is this eGrams budget tab. And this will give you exactly the level of information and detail that you need for eGrams. So whatever comes up in here, we have everything coded in here so that it only shows you the level of detail that you need or that's required. So the detail that's given, you can just copy and paste right into eGrams, and hopefully that'll help you to enter that a little bit easier.
So just to point out again, the reason you guys can input in this level, this minimal amount of detail, if you will, is because our central grants and purchasing folks accept the fact that the detail is actually within the budget tool itself, and so it'd be repetitious to also have that same level of detail in your eGrams report. So because you diligently captured the detail all the way along in your budget development, there's not a need to repeat it in eGrams.
Okay, thank you. So moving on to the service category budget tab, you will go in here and select the service categories that you are funded for. And I just did some random ones in here. And then you'll put in the estimated percentage of federal funds that you expect to spend on that service category. So the goal is to have the core 75% and support 25%. Correct me if I'm wrong on this, Tom, but it doesn't need to be exactly correct because we kind of base it off of the aggregate of all of our agencies. So it doesn't need to be exact, but go ahead.
So yeah. So the 75%, 25% rule is in place for MDHHS as the pass-through entity. We manage these costs in the aggregate. So we recognize the fact that some agencies might be more than the 75%, some agencies might be less, but that's something that we manage as a division, just to be sure that we're within those limits. And if you're not within those limits, that's unless we come back and say anything different, you'll probably fine. So don't sweat that too much. We'll let you know when we're not managing it within the aggregate and have to make some adjustments. But the experience to date is that we've never had to come back and do that.
Yeah. Yep. So this is one of the only tabs that if you get a red error right here, don't be alarmed. So, and then if you need help with service category details or what falls into each service category, there's PCN 1602 that gives you some detail on that. And then the FSR data tab. This one has been revamped quite a bit. Tom added some columns in here so that it matches what's in eGrams. So your current period totals need to match what the current period totals are in eGrams. in the FSR, just a reminder to make sure this is attached to every month or quarterly FSR. And then you'll have your corrections column here, year-to-date expenditures, budget, balance, percent expenditures, and then all of your service categories that you selected will be up here across the top. So this just makes it easier with the way that this is formatted. It makes it easier to match it with the FSRs and egrams. And just a reminder, we do need actual costs by service category, not budgeted, when you submit this. So again, just to reiterate, we do have Myers and Stauffer on retainer for you guys to contact still if you have any questions about how to do that and how to track it by actual cost. And then we have our time tracking here. So this will, this time tracking aggregate and time tracking individual are not required tabs. Those are just resources for you guys if you need a way to track your time by service category. And then you can change this up here and it will change all of the dates across the top to match your pay period. So again, not required, but if you don't have something in place to track your time by service category, this is a really good resource for you guys to do that. And same with the individual. So this one, the aggregate, it's just going to show if you have 5 employees in there, it'll show them all across the top here. That's the only difference. And then the individual will just show the 1. And then we have this 3-year summary. All you really have to do on this tab is change these effective dates. So these dates will be 10/1. Well, it won't let me do it right now because I've saved a copy of it. But so you'll just have to update these dates to 10/1/2020 through 9/30/2023, and then all of this automatically adds in.
Yeah, let me point out that those tabs are really only if we're under an RFP. So you don't really have to do anything with them because we're using this tool for RFP purposes. Also, these other 2 tabs are in there for use in RFP circumstances. If we're not doing an RFP and this budget is not a part of the RFP, don't worry about it.
Cool. Okay, so that was really all I had for this. I think we have some time for questions, or I don't know, Shauna, if you wanted to hold questions until the end.
We can address those all during the Q&A. Beverly, I think, is keeping track of all of those, so we can go back to this for the Q&A portion.
Okay, perfect. Then I am all done.
All right, thanks, Betsy. Shanna?
Hi, how are you all? And no, I'm not going to show a picture. Yes, I did get my hair cut last Saturday, but it's still not going to be shown, okay? So we'll just do that professional one that you guys remember. First, I would like to thank all of you for accommodating us this past year and patience with me getting the audits and reports reviewed, following up with our questions. I know I've been emailing different agencies out lately because I'm reviewing work papers and drafting reports, and then meeting with us to discuss the reports. We appreciate it. I especially would like to thank all those agencies we are currently conducting virtual audits with right now during our pandemic. We truly appreciate you guys working with us so that we can comply with our annual fiscal reviews requirements. Now I'm going to give you an update where I'm at and going forward, and then discussing a little bit some of the common findings that we're running into in 2019. So from our 2019 monitoring plan, currently, our last day actually in the office, we were able to meet with Marquette Health Department for the HIV Ryan White program, as well as my other program, Wiccan Family Planning, and we got that PA out. But unfortunately, the health departments got hit really hard during the pandemic. So we're waiting for that cap to be sent out. So whenever you get a chance, Bill, we're waiting for you, but I'm not going to put pressure on you. although I did share that with everybody. So I guess in a way I put peer pressure on you. But as soon as we get that, we'll be able to issue Marquette County Health Department. I also have a preliminary report set and ready to email out to Great Lakes Bay Health Centers, but we're waiting for things to calm down for you as well. So as soon as you feel like we can review that with you, please reach out to my auditors, Cole, Matt, or myself, and we can go ahead and send that PA out to you as well. I was able to send out Sacred Heart yesterday. I had the pleasure to meet virtually with Tim, Marcia. Marcia's her retiring on us on September 30th. Joyce is the new Marcia, and Pam. So it was a pleasure working with you guys yesterday. And our final report to you was issued this morning. And then currently I'm in the process of Wellness Networks Unified Health. I've been working with Financial One with a few questions, and I have that PA done, and it's going through my QA process right now. I'm also working on Central Michigan District Health Department and Wayne State University. So I hope to have those PAs out to you guys before, probably by the 3rd week of July. And then what is done, we had to do an abbreviated audit scope for the Trinity Healthcare System, Mercy Health Hackley and Mercy Health St. Mary's. They had the perfect storm this year. They had to roll out a brand new ERM system and then got hit with COVID. So we definitely feel sorry for you guys. But you were able to accommodate us by sending us the bare minimum so that we could at least do a high level review of your fiscal year 19. So we were going to go ahead and issue a report with a decreased audit scope on that. And then we'll circle back this audit cycle and do a little bit more thorough audit virtually, just to give you a heads up. And then currently my auditors are wrapping up Detroit Health Department. So those were the 3 that we ended up hitting the 3rd week in March when this pandemic hit. So again, thank you for working with my auditors. We appreciate it. Currently, we've got a 2020 monitoring plan. We were given the okay that we are going to continue our audits, but they will all be virtual. So we will do the best to accommodate you, work with you. Right now, we're currently working with Grand Rapids Red Project and Wellness Aids. We appreciate you guys working with us. And we know they're going to be a little bit longer because people are not in the office yet full time. So we keep that in mind, but we appreciate that you are working with us so we can keep our audits going. So for 2019, some of the most common audit exceptions that we're running into. The first one is predetermined percentages improperly used to distribute salary and wages. So we understand that for health departments and some of our larger hospitals and maybe Wayne State, that you'll use a budgeted methodology to distribute your salary and wages to begin with. But part of 2 CFR 200 is you have to have a process in place to compare it with actual. So that's one of the biggest ones that we seem to run into. So hopefully now that you're aware of it and we're seeing it as a repeat and we're coming up with solid corrective action plans, we can see those particular exceptions minimized in the next couple of years. Another one is non-compliant fringe benefit and or leave time distribution. So for those that we worked with this last audit cycle and we had your salary and wages based on actual, there was another step to make sure your leave time was also based on that same methodology. So we had a couple of that come up this last year as well. And I know Matt and Cole worked with those agencies to devise a corrective action plan and templates to make it easier for you going forward. Another one, which goes off the new incentive controls and gift card processes and templates that Shauna's group is working on right now, is insufficient controls over program incentives. So the big one is not having a policy or having the policy but not following it in the current year that we were reviewing. And the biggest thing is just make sure when you have these gift cards, your controls are in place, that you have an audit log, your clients are signing the documents, and that you're tracking them and periodically doing some type of reconciliation to make sure your cards on hand reconcile with what you've purchased and what you've distributed. Another exception that we see quite a bit is expense reimbursements did not have proper authorization prior to payment. What we do with that is we audit against your policies and procedures. So make sure, A, your policies and procedures have been updated. And if you say that you authorize all purchases for an amount over a certain amount, say $100, and that executive director or the finance director or the program director authorizes all of them, we're going to look at that. So make sure that your policies are also, manageable, and especially in this new environment we're dealing with virtually. If you say you're going to hand do it, you might want to update those policies to say they're going to now be emailed or something of that nature, because whatever your policy is, that's what we're going to audit against. So that's just something to remember going forward. Another one that we're seeing are unallowable expenses reported to the Ryan White Part B or D program. And this is based on the service category. So you know the program has been working with you. We have this great tool now that everybody's using to help you budget and then actually report all of your expenditures by service category. So make sure not only that you have the sufficient support for these expenses by service category, but also make sure that you are reporting them and recording them in your accounting records in the right category as well. So sometimes we'll see on support documentation that this was a HIPCA, but in essence it was a medical expense, or it was emergency finance support, but it was actually something else. So just make sure your controls are in place, because we're going to make sure that everything is reconciling together and what was reported and recorded was actually the actual expense. Another one we're seeing, and this is also going off Betsy talking about it. We wrote this up on probably half of our agencies this last year, that reported service category expenses were based on budgeted amounts. So it's great that we have this tool, but part of the contract terms in 19 and going forward is when you report your expenditures on your FSR, that they are based on actual expenditures. So I know you might do the first quarter, maybe you're doing it unbudgeted, but make sure that at one point you reconcile to your actual on your FSR, whether it's monthly, whether it's quarterly, but just make sure when we get to that point that when we are reconciling what you reported on your FSR, we're going to be looking that it was on actual expenditures and not unbudgeted. Another one we're seeing is insufficient documentation to support your allocated space cost. So basically, your allocation methodology must be based on your agency's or health department's policies and procedures. We want to make sure that they are applied consistently and uniformly to both your federally funded programs and non-federally funded programs. And the big thing that we saw this last year too was you have a methodology and you allocated it, but you didn't save your supporting documentation, how you came up with those numbers. So just make sure that you keep your supporting documentation, your audit trail on how you concluded that this was the allocation, these are your numbers, this is what you recorded and reported. That's what we're looking for. Another one that we're seeing, FSR is not supported by accounting records. So for example, if you have a subsidiary ledger and you use that to report your FSR, make sure you provide us that workbook or crosswalk and explain it to us. So even if your GL isn't necessarily going to reconcile, we would expect your subsidiary ledger or your crosswalk to reconcile to what you reported. And again, the program has a CPA firm. If you have to have questions or if you need help with that, please reach out to Stoffers. That's why they are there. It's free of charge. And most of my programs don't offer this tool, and it's really great that the HIV program does. So take advantage of those tools, especially for your smaller nonprofit agencies. Something we're running into this year too is an insufficient cost allowability policy. So make sure that your policies and procedures are updated post 2 CFR 200 in 2014. And something that's really applicable to Ryan White is make sure not only your cost allowability policy includes 2 CFR 200.302 Part B7, it also includes PCN number 1602, because that will incorporate both the 2 CFR 200 and HRSA's 45 CFR Part 75, which is more focused towards Ryan White. Another one too is make sure you have sufficient procurement procedures. That is something that we focused in on more this last cycle, and we were able to help you guys with that going forward. And pretty much what you do is what we write in that exception, copy and paste that into your policy and you're good to go. So that's one of those things we try to help you out with. I will let you know we're a little behind still. You know that my auditors and I are both on furlough through 7/29, and I manage 6 other programs and 9 auditors. So I do apologize. I'm still a little bit behind, but we are getting caught up, and we appreciate your patience. If you have any questions, please go ahead and ask Beverly, and my auditors here, Cole and Matt, are also here, and we'll be happy to answer any questions that you have. Thank you, guys. We appreciate all of your help and accommodation.
Thank you, Shanna. We can go ahead and move to questions. Beverly, what do we have in the chat box so far?
All right. I believe Steve from Grand Rapids Red mentioned the first question is that cell is protected. Steve, could you unmute, please, and mention to us which cell you were talking about?
Sure. I mean, it doesn't really matter, but it was the 3-year one. The date cells are locked.
Oh, gotcha. The 2019 to the 2021.
Yeah.
Okay. All right. Thank you. We'll make note of that. Thank you for that. The next question that we have that's come in the chat box is, we are currently tracking time by grant. This is from Aaron Hobson at Hackley McLeese. Did I understand correctly that in FY21, we should start tracking by service category? Tom or Shauna, would you like to field that question, please?
We have been tracking by service category, ever since the advent of the Ryan White reporting tool that we rolled out, I believe in 2018, I want to say. So I think this is the 3rd year of doing that. So we had been at this for a little while. So, but since then, I should say that since 2018, the emphasis has certainly been on tracking by service category. It's something that we really were supposed to be doing all along, but the site visit by HRSA in 2018 was really the driving force toward moving us more solidly in this direction. So we're trying to provide you guys with some tools and resources to help you with that transition. The Ryan White reporting tool being one of them, and the technical support available through Myers and Stauffer, and the continued auditor site visits with Shanna Havens and the Bureau of Audit also helping in that regard. So it really shouldn't be, that new a thing.
Thanks, Tom. And one more question's come in. Will this presentation be recorded and available to come back to? Our goal is to have the recording to you either by call of business today or the latest tomorrow. So yes, it will be sent to all the recipients who were included on this invitation. Okay, there are no more questions in the chat box. Does anyone else have questions? You may raise your hand and then I will call you out to speak so that we are orderly. Okay, seems like there are no questions. Shauna, I'm going to turn it back to you.
Okay, thank you everyone for joining us today. If you need any more individualized assistance with your Ryan White reporting tool, please don't hesitate to reach out to us. We'd be happy to help and work with your agency one-on-one. But other than that, I have nothing else. Tom, do you have anything to say in conclusion?
I thank everybody for such great attendance today. And also, I guess, emphasize the fact that there is a short survey that should be in your email boxes, and your feedback would be greatly appreciated. So thanks, everybody.
Thank you. I hope you all have a great day, and please let us know if you have any questions.